Welcome to the Deep Dive. We cut through the noise to get you the knowledge that matters, fast. Think of us as TalkTickers, your personal earnings call summarization service. Today we're diving into Frequency Electronics, that's FEI, and their fiscal year-end 2025 earnings call. We're going to pull out the key takeaways, really dig into the financials, and see where they're pointing for future growth. You'll get a solid understanding of what really moved the needle for them this past year and what might be coming next.
That's the plan. We'll synthesize all that info from the call, but, look beyond just the numbers. We want to highlight the strategic shifts, the tech advancements, basically what defines FEI's position right now and where they're headed. All based strictly on what they presented, of course.
Okay, let's jump right in. A quick look at the headline numbers for fiscal year-end 2025. Looked like quite a period for them.
Oh, absolutely. A standout year. Consolidated revenue reached $69.8 million. That's for the fiscal year ended April 30th, 2025. And that's up quite a bit from $55.3 million the year before.
Wow, okay.
And get this, the fiscal fourth quarter, it was their highest revenue quarter in 25 years.
25 years. That's genuinely impressive. And that strength carried through to the bottom line, didn't it?
It certainly did. Consolidated net income for the year just soared. We're talking $23.7 million or $2.46 per share.
Huge leap.
A massive leap from $5.6 million or 0.59 per share the previous year. And operating income showed similar strength, climbing to $11.7 million from $5.0 million. It points to real operational leverage.
So let's unpack that. What really drove this revenue growth, and what's it tell us about their overall financial health?
Well, the main engine here was increased sales in the U.S. government satellite market. That was the big story. Revenue from commercial and U.S. Gov satellite programs hit about $40.9 million. That's, 59% of their total revenue?
59%, okay.
Up from 42% the year before. And it's worth noting, this revenue is mostly recognized using the percentage of completion method.
Right, so it reflects ongoing work on those big contracts.
Exactly. It gives you a sense of steady progress. Now, non-space U.S. government and DoD revenue did dip slightly to $26.5 million.
But the satellite side more than made up for it.
Precisely.
Yeah.
The strength there was more than enough to compensate.
Okay, that makes sense on the revenue side.
Yeah.
How did that translate into gross margins? Did they see improvement there too?
They did, yeah. Both gross profit in dollars and the gross margin percentage went up. Management pointed to really strong execution on some traditional space programs in their New York segment specifically. Apparently, those came in at higher margins and, interestingly, ahead of schedule.
Ahead of schedule, nice.
Yeah. So while the last quarter's gross margin was 37%, the full year averaged out stronger at 43%. And they're actually targeting 40% or more for this coming fiscal year. So they expect to maintain that strength.
Okay, good target. Now, looking at expenses, where did the investments go?
Well, selling and administrative, or SG&A, stayed pretty constant as a percentage of revenue, 18%. But the dollar amount did go up by about $2.1 million. They said that was mostly payroll-related stuff and trade show costs, sort of investing in growth.
Makes sense. What about R&D? That often tells a story.
It definitely does here. R&D expense saw a really notable increase, jumped to $6.1 million. That's 9% of revenue.
Up from
$3.4 million. They framed it as a commitment to technical excellence and also, frankly, catching up on some R&D that was lower than planned the year before.
Okay.
And they expect that R&D investment level to continue, maybe even increase slightly compared to historical levels. So clearly investing for the future.
Definitely sounds like it. And what about the balance sheet? Cash position, debt?
They look pretty solid there. Working capital is strong, around $30 million.
Good cushion.
Yeah, and a current ratio of 2.3 to 1, so plenty of short-term liquidity. And critically, they're debt-free.
Debt-free is always nice to see.
Always. Their fully funded backlog that secured future work is about $70 million. It's slightly down from $78 million last year, but management seemed quite confident, stressed its solidity.
Okay, and cash itself?
Cash did decrease by about $13.6 million over the year. But there's context. Around $9.6 million of that was a dividend paid out in Q2.
Right, shareholder return.
Exactly. The remaining $4 million or so was related to timing, billing and revenue recognition cycles. They expect cash to fluctuate quarter to quarter, which is normal, but trend higher over time. They feel their liquidity is perfectly adequate.
Got it. Okay, now this is where it gets really interesting, I think. Future growth. The CEO mentioned that Q4 benefited from pulling some revenue forward due to strong execution. So what does that imply about future quarters, and where do they see the big opportunities?
Right. So they don't give formal guidance. The contract awards can be lumpy. You know how it is.
Sure. Typical for the sector.
Exactly. So they cautioned, look, not every quarter is going to look like this record Q4. That was partly due to pulling work forward. However, the medium-term trend, they were very clear, is upwards. They see real growth over the next, say, 2 to 5 years.
And what's driving that confidence?
A big factor is recent legislation from Congress. More funding allocated for space and defense programs. That means more money available for their customers, which should translate into more contract opportunities flowing to FEI over the coming quarters and years.
And they aren't just sticking with the usual big prime contractors, are they? I heard something about expanding the customer base.
That's a key point. They're actively going beyond just the traditional primes. They stress they have great relationships there, but they're also bidding alongside these next-generation defense companies.
Interesting phrasing.
Yeah, these newer players are apparently getting more attention under the current administration. FEI sees this diversification as positioning them really well for industry shifts over the next 5, 10, even more years.
Okay, let's get specific then. The CEO mentioned several key growth areas. Can you walk us through those?
Sure. They highlighted a few key initiatives. First was Golden Dome.
Golden Dome.
Yeah, it relates to their involvement in key missile programs. They expect more opportunities there, both for ground-based terrestrial systems and space applications.
Okay, missile defense related. What else?
Second, APNT. That stands for Alternate Position, Navigation, and Timing.
Ah, the GPS alternative space. That's huge right now.
Exactly. With all the concerns about GPS vulnerability, jamming, spoofing, especially in places like the Middle East, Eastern Europe, FEI's work on quantum magnetometers represents a potential unjammable approach.
Unjammable navigation. How does that work?
Well, the idea, potentially, is using highly sensitive magnetometers to detect tiny variations in the Earth's magnetic field to determine position, rather than relying on external satellite signals that can be blocked or faked.
Fascinating stuff. Truly cutting edge.
It really is. And their compact, high-performance rubidium atomic clock, they call it Turbo, is another key piece.
Turbo. Okay.
Yeah, it's a crucial component for other alternate PNT approaches, too. And they're also involved in making GPS itself more resilient, augmenting the current system with lots of smaller, lower-cost satellites.
So tackling PNT from multiple angles. And it seems like quantum is a big theme beyond just the magnetometers.
Oh, absolutely. They're leaning into quantum sensors, building on their atomic clock know-how. They're developing solid-state diamond-based quantum magnetic sensors with MIT Lincoln Labs.
MIT Lincoln Labs, okay.
Yeah, and also Rydberg sensors, which could lead to incredibly small microwave antennas, working with NIST on that. They even hosted a quantum summit in New York last year, planning another this October. Management sounds really bullish on quantum sensors.
Seems like a huge potential market.
Huge addressable market, especially for GPS alternatives in areas like, say, commercial aviation, where reliability is everything.
Okay, so putting this all together, lots of growth avenues, R&D spend is up, but management mentioned variability in the short term. Can you clarify that? What exactly did they mean?
Yeah, that's an important distinction they made. It's variability in the timing of new contract awards, not uncertainty about the work itself being out there.
So the deals are expected, just maybe not landing exactly when predicted?
Precisely. They attributed some of this timing shift to the new administration wanting to, put its own stamp on things, potentially reprioritizing or rephasing some programs. But crucially, this variability applies to future potential work, not the existing $70 million backlog. They were clear that backlog is solid, although, they always add the caveat that contracts can technically be terminated.
Sure, standard disclaimer. And how do they define short, medium, and long term?
Good question. Short term is roughly the next year. Medium term is 2 to 5 years out. Long term is beyond 5 years. And they explicitly expect higher growth to kick in during that medium term, the 2 to 5 year window.
Okay. And with all this R&D, especially in advanced areas like quantum, do they have the cash to fund it all? They mentioned the R&D spend going up.
They seemed confident, yes. They said their cash position is adequate. Their approach is pretty targeted. They use internal funds strategically, but they leverage external funding, quite a bit money from government agencies, prime contractors.
Ah, so it's not all self-funded.
Not at all. That quantum sensor development, for instance, mostly externally funded, with just a small internal top-up. And a key benefit they mentioned, they get to keep the intellectual property, the technology that's developed through these partnerships.
That's a significant advantage.
Yeah.
Okay, one more area. The Space Development Agency, SDA, Lots of buzz around that. What's FEI's status there?
Yeah, SDA is interesting. According to FEI management, the whole SDA process is kind of being reevaluated by the new administration.
So things are in flux.
Seems so.
Okay.
They're still tracking SDA activity, but the specific transport layer, the data layer, is apparently being reimagined, as they put it. Its future shape is a bit unclear right now.
Okay. Any timeline on clarity?
Management expects something to pop, their words, regarding SDA within the next, say, 9 to 12 months. So maybe some resolution or new direction coming within the year. And just looping back to that turbo product, the compact atomic clock.
The near-term one.
Exactly. They expect that to be actually available, productized within this coming fiscal year. Initial market size they see is maybe $1 to $2 million, but growing from there. So that's a shorter timeline for revenue compared to quantum sensing.
Quantum sensing being more like 5 years out for product revenue.
That's the timeline they mentioned, yes. About 5 years for quantum sensing products to start generating revenue.
Okay. Got it. Now let's shift gears slightly. Time for the segment where we toss out a wild, yet maybe plausible idea. And remember, everyone, this is absolutely not financial advice, just a thought experiment.
Right, purely informational. Okay, so given everything we've heard about FEI, their unique spot in things like quantum sensing, which is nascent but could be massive, here's a hypothetical idea. You could think about something like a multi-leg option strategy, maybe a calendar spread.
Okay, explain that.
So you might consider buying a long-dated call option, let's say 2, maybe 3 years out. Pick a strike price well above where the stock is now. The rationale there is you're betting on that 5-year timeline they mentioned for quantum sensing revenue to really start showing up and impacting the valuation down the line.
Buying time for the long-term story to play out.
Exactly. But to help pay for that long-term bet, you could simultaneously sell a near-term call option, maybe just a few months out, at a lower strike price, closer to the current price.
Generating some income to offset the cost of the long call.
Right. This strategy kind of aligns with what management's saying. Expect medium-term growth, that 2 to 5 year window, and specifically that 5-year target for quantum products. And you layer on their point about vertical integration, how controlling the tech internally gives them an edge. It adds a little, conceptual confidence they might hit those long-term goals, even with the near-term timing variability.
So the trade idea basically tries to leverage the market, potentially focusing on short-term lumpiness, while you're positioned for the longer-term tech pipeline they keep highlighting.
That's the thinking behind it. Again, just a hypothetical construct based on the call info, not advice.
Definitely not advice. Okay, quite a journey through FEI's results and outlook. We've covered a lot of those impressive year-end numbers, the strategic shifts, the really exciting tech frontiers like quantum and APNT. Hopefully you now have a much clearer picture of their financials, what's driving growth in space and defense, and how they're investing in what comes next.
Yeah, and remember, the story here, it feels like it's less about just that one record quarter, impressive as it was. It's more about how they're positioning themselves for that medium to long-term growth, trying to navigate the short-term contract timing stuff. That disciplined R&D funding approach, combined with their vertical integration, those could be real differentiators for them going forward.
So, as you digest all this, maybe think about what stands out most to you. How does FEI's story, maybe their push into quantum, reflect broader trends you're seeing in defense and space tech? Something to consider.
And just one last time, the information we shared today is purely for educational and informational purposes. It is definitely not financial advice.
Thanks for joining us for this deep dive into frequency electronics. We're always here to help you get informed, quickly.